Hello, lovely people out there. How are you all doing? I'm Kate Hill and I am here to give you the best, unbiased and honest commentary about our property markets, along with some really fantastic hints and tips, so stay tuned. Just quickly before we get started, if you are interested in what is happening specifically with the Adelaide property market right now, then you need to watch this video right here. The overall number of properties listed for sale increased in April, but fewer homeowners are putting their dwellings for sale, according to the latest report from SQM Research. The total residential property listings rose by 2.4% in April. However, listing levels were still 10.3% lower than during the same month last year. Canberra, Perth and Sydney registered the biggest monthly increases. Only Hobart posted a decline in property listings over the month at 4.8%. On an annual basis, listings grew in Sydney, Perth and Melbourne. Melbourne clocked the most substantial annual gain in property listings at 18.9%. New listings, however, declined over the month, down by 2.8%. Still, this level was 57.5% higher than last year. Hobart recorded the most significant decline in new listings at 16%, while Canberra and Sydney reported the healthiest gains at 10.7% and 4.8% respectively. We have seen a strong rise in Sydney's new property listings for the month, in part driven by having 5 weekends, but also because property owners are keen to take advantage of the buoyant conditions, said SQM's managing director. He also said that the decline in old listings suggests that sales rates were still quite strong despite the lift in prices. In fact, national asking prices increased by 2.6% for houses and 0.2% for units. Capital cities reported a 5.6% growth in asking prices for houses and a 1.8% decline in units. We expect to see moderate to strong activity in the housing market over this quarter, which will likely push house prices even higher. We are, however, seeing ongoing oversupply of units in Sydney and Melbourne, with falls in asking unit prices over the month, leaving some space open for first home buyers and investors to enter the property market, SQM said. Perth's median house price broke the $500,000 mark in April for the first time since December 2018, as it maintains its growth trend, according to the latest report from the Real Estate Institute of WA and CoreLogic. Perth's home value index increased by 0.8% over the month, hitting 513,000. Now, this marks the 9th consecutive month of price gains for that city, according to CoreLogic data. Damien Collins, president of the Real Estate Institute of WA, said that the Perth property market continued its strong recovery in April. It's a testament to the strength of the local market that even with the Easter and Anzac public holidays, as well as another lockdown during that month, that prices are continuing to rise. Perth's home value index has been improving since August 2020. Over the year so far, prices have already increased by 5.9%. Over the month, the number of properties listed for sale increased by almost 6%, Damien Collins said. It's clear that the current property market conditions are starting to entice more sellers to the market, which is helping to keep up with demand and provide buyers with more choice. Another factor indicating a busy market was the shorter selling days. The median time to sell a home in Perth is now less than 2 weeks, dropping to 13 days. Mr. Collins also said that, despite there being more properties available for sale, buyer appetite is still very strong and sellers continue to enjoy the quickest turnaround in sale times that they have seen in more than 15 years. Home loan commitments reached record levels in March with a 5.5% monthly rise, according to data from the ABS. The figures provide evidence of the entry of investors to the national boom market, with a 12.7% rise in loans for investor housing. The Property Council of Australia says that lending to investors accounts for over half of the March rise in housing loan commitments. They say that Investor lending has seen a sustained period of growth since the 20-year low seen in May of 2020. The rise in March is the largest recorded since July 2003. It was driven by increased loan commitments to investors for existing dwellings. The value of owner-occupier loan commitments for the construction of new dwellings fell 14.5%, the first fall since the Home Builder Grant was introduced in June 2020. The biggest monthly increase in loans during March were recorded in New South Wales, up almost 10%, followed by Queensland, up 5%. Westpac has downplayed the prospect of regulators stepping in to curb the boom in house prices. A rapidly rebounding economy with a consumer sentiment at a decade high and a drop in stressed loans enabled the bank to more than treble its half-year cash profit from 993 million to 3.5 billion. Westpac's chief executive has maintained his forecast that residential property prices will rise 20% by the end of next year, although most of the increase will now be front-ended into 2021 before housing supply constraints ease next year. He contrasted the current boom to previous cycles, saying the riskier interest-only segment was much lower this time. Last time, there was more investor activity, higher loan-to-value ratios, and more interest-only lending, he said. It's not happening this time. The Australian Prudential Regulation Authority has no mandate to contain growth in house prices, but might intervene if lending standards deteriorate, said Westpac's chief executive. Now, we will keep you posted on all things property from around Australia as our year progresses. I am giving you, as always, the best commentary and content here on our channel, so please let me just ask you to quickly hit the subscribe button, click the notification bell, and if you are enjoying this free content, please give me that like button too. I do really appreciate it, and I will see you again really soon. Bye.